Today, we're diving deep into the materials sector. But we're not going to just throw opinions around. Nope. We're using a data-driven framework that shows us exactly where the biggest institutions, the real smart money, are placing their bets. So, we're here to answer that one big question. Where is the smart money actually going? We're going to follow their footprints, see which companies are soaking up serious capital right now. But hang on. Before we get to the actual company names, it's super important you understand how we even find these signals. This isn't just guesswork, right? It's a systematic process we use to cut through all the noise. It all starts with screening companies based on 3 things, all weighed equally. First, pretty simple. How many big institutions actually own the stock? Second, what's the total dollar amount, the market value, they hold? And third, and this one is absolutely key for spotting momentum, how much has that dollar value changed just in the last quarter? From that point, we start to really refine the list. We layer in technical momentum signals. We look at the big picture macro trends that could help or hurt the company. And, this is a big one, we kick out any stock that has seen recent insider selling. All of that gets boiled down into one single consensus score out of 10. All right, now that you know the how, let's get to the what. It's time for the results. Here is the top 10 countdown of material stocks, all based on that institutional signal we just talked about. And coming in at the number 1 spot, with a really strong bullish score of 7.7, is Alcoa, ticker AA. You just can't deny the institutional interest that's flowing into this name. So what's the deal with Alcoa? Well, they're a fully integrated aluminum producer. That means they do everything from digging the raw stuff out of the ground to making the finished product. But what's really got institutions excited are these drivers. They're betting on a massive need for aluminum, not just for power lines and lighter cars, but for this huge new catalyst, the absolutely massive amount of energy needed to power the AI and data center build-out. And if you want to see what conviction looks like, this is it. The change in market value held by institutions from one quarter to the next was a jaw-dropping 204.8%. That is not a small shift. That is a tidal wave of capital flooding in to back that AI and infrastructure story. Okay, let's roll on to our number 2 pick, Nucor, ticker NUE, with a solid bullish score of 7.5. Now, this one is the biggest steel producer in the US, but it's got a very different story than Alcoa. Nucor's story is all about America. See, they use these low-cost, efficient electric arc furnaces, which puts them in the perfect spot to benefit from 2 massive domestic trends. First, the reshoring of manufacturing back to the US, and second, all that federal infrastructure spending. You add in a rock-solid history of buying back their own stock and paying dividends, and yeah, you can see why institutions are piling in. Coming in at number 3 is a name that might actually surprise you, Reliance Steel and Aluminum, ticker RS, with a bullish score of 7.0. And here's the most important thing to understand about these guys. They are not a commodity producer. So what are they? They're a metals service center. Think of them as the value-added middleman. They buy metal, they process it, they cut it, and then they distribute it. This means they aren't nearly as exposed to the wild price swings of raw steel and aluminum. Institutions are loving this story because they get stable profit margins and direct exposure to high-end markets, like aerospace and defense. It's really a bet on stability in a very volatile industry. All right, moving into our neutral-rated names. At number 4, we've got Vulcan Materials. They're the biggest U.S. producer of aggregates. We're talking crushed stone, sand, and gravel, so they are a core holding for any long-term bet on infrastructure. Institutional ownership is super strong, but that near-term momentum, it's just kind of moderate right now. Next up at number 5 is Newmont, the biggest gold miner on the planet. Of course, institutions have huge positions here. It's a classic hedge and a way to play supportive trends for gold. But the momentum for Newmont itself hasn't really been picking up steam, and that's what's keeping its overall signal in that neutral zone. At number 6, we've got Barrick Gold. This one's interesting because it's kind of a 2-for-1 deal. You get exposure to gold, which is defensive, and also to copper, which is tied directly to the industrial and electrification cycle. The institutional money flow is steady, for sure, but it's not surging. Number 7 is James Hardie, and this is pretty much a pure play on the housing market. They dominate the market for fiber cement siding, so while a lot of institutions own it, all the mixed signals we're seeing around interest rates and home construction are keeping new money waiting on the sidelines for now. At number 8, we have another core infrastructure supplier, Martin Marietta. And honestly, it's a very similar story to Vulcan. They benefit from that long-term, predictable demand, but our data shows that the change in institutional money quarter over quarter was, well, Pretty flat. Number 9 is Vale, a true global mining giant. Its destiny is really tied to two big things: Chinese steel demand for its iron ore and the EV battery market for its nickel. So while institutions hold a ton of it, that sensitivity to global commodity prices is keeping the momentum signal balanced right in the middle. And closing out our list at number 10 is our one and only bearish-rated name, West Fraser Timber. Now, this is interesting because our raw data actually showed a spike in institutional buying. But this is exactly where that human qualitative overlay becomes so important. The fundamental demand for lumber is just plain weak because of the housing market, which is why, despite the data blip, it gets a bearish signal from us. Okay, so let's zoom out. We've gone through the individual names, but what are the big picture themes here? What story is all this data telling us about the entire material sector? This slide really just sums it all up perfectly. On one side, you see institutions are actively buying companies with stable, value-added models like Reliance. They're absolutely placing heavy bets on US-focused infrastructure and reshoring stories like Nucor, and they love companies that are giving cash back to shareholders. But on the flip side, they're pretty cautious on pure-play commodity companies, anything that's tied too closely to the volatile housing market, and stocks that are really sensitive to shaky global demand.
So let's boil this whole thing down. What are the highest conviction takeaways from all this data? Where is the momentum and the narrative the strongest right now?
The three names that really stand out from the pack are Alcoa, Nucor, and Reliance. For Alcoa, you've got this massive institutional accumulation combined with that powerful AI energy story. Nucor is just the cleanest way to play US reshoring and infrastructure, and you know they'll return capital. And then Reliance offers that stability that's so prized in an otherwise volatile sector. And all of this leaves us with a really fascinating question to think about. With these huge trends like infrastructure and AI energy demand so clearly driving where the big money is going, what's going to be the next thing they target to play these multi-year stories? Before we wrap up, just a quick reminder, the information provided in this explainer is for informational and educational purposes only and should not be construed as financial advice. Please be sure to consult a qualified financial advisor before you make any financial decisions. And hey, if you want more data-driven breakdowns just like this one, make sure you subscribe to the EDGR channel right here on YouTube. And of course, don't forget to hit that like button. Thanks so much for watching, and we'll see you next time as we continue to track where the smart money is moving.